Traders, welcome back to our price action trading lesson. We're going to use price action rules to help us understand what is happening in the market and what are the high probability setups. We started with a massive spike down. You can see the massive gap. So I'm trying to divide the structure into two trading ranges, one trading range over here and the second trading range right here. You can see flat exponential moving average. You have price swings up and down. Now, gaps like these a lot of times will get filled throughout the day. So if you can see some bullish bias eventually, your target is to see these gaps filled. But let's zoom in a little bit closer because the market opened. We are in a trading range, uptrend played out, and now the market is working lower. So because the market is working lower, what I have to do now is I have to draw a downtrend working lower like this. I'm going to copy it, put it at the bottom, and my focus now is on this bearish trend down. Simple price action rules because we're in a trading range and I followed the short-term trend line rule. So we're coming off the highs. Downtrend is working lower, so I want to see second entry short, a high probability setup till I get pullback at the key entry point at the EMA. We have a second entry short here. Actually, if I disregard this hidden entry right here, but it's not full at the EMA. You can see there's still gap between the body and the EMA. It is a doji bar, so I have to be careful. Can I get something close to the EMA? We're correcting, and now we have visual till I get pullback. So what's going through my mind is I'm going to measure this leg, project this second leg. Downtrend has a break and I expect new low to be tested following the trend line rule. So if I get some nice visual second entry at the resistance I can consider, we have a second entry short here, visual one. Visual because you can see it looks like the broad will get pullback, but it was too big. By the time this bar closes, it's simply too late because you're selling at the bottom of the move and you don't have that much room before the new low is made. You don't know it's going to drop lower like this. But unfortunately, it was too big. Had it been smaller, it's a great high probability setup. Market moves in pairs of twos. The downtrend needs to this new stream and everything aligned. So downtrend played out, and now I'm going to pause looking to go short. Okay, we are in trading range. Downtrend played out. So I'm leaning more towards reversal, but market dropped lower again. So now I'm really confused why there is no bullish reversal. Another push down, that can happen, but it's already telling me that hold on, the bearish bias is still too strong. This is not what is supposed to happen. There's supposed to be reversal if it's acting like a trend range, and market pushed lower again. So now it's obvious the bullish reversal is not happening. It's still too bearish, and I have to now draw and adapt to a slightly bigger pattern, something like this. But this is not really reliable channel just yet. And why is that? Well, because remember, we were part of a trend range the whole time. And we are exactly around this key level. And this is really generally the area where you can get chopped to pieces, where you're still below the key level. So you can't really go long because it's too bearish. But at the same time, you haven't moved too far from the initial trend range for you to focus on selling. If I want to start focusing on this downtrend, I need to see a brand new push phase trending lower and lower, getting away from the trend range. If I keep hovering around this key level, it's too much conflicting variables and I can't take anything. You have a visual to like a pullback, which is technically double trap, but it's not a horrible setup. But like I said, you have to sell around this price level. I don't like it because it's just so sideways. Nothing here. I can't take this lower high, two sideways, right into these lows, still around this key level. I can't take anything, so I'm just waiting. Breaking extreme. Even the wider downtrend played out. So if I want to consider now to go long, given the fact there is a wider downtrend, I would need to see some strong push above EMA. You can see still we are part of this consolidation, so just be patient throughout this area. It's okay, we keep working lower, so I can't go long, but market suddenly reverse all the way up like this. The whole time you're thinking about second entry long, but there was no second entry long, and this was actually a massive bullish reversal. So I'm going to draw uptrend like this. We keep working higher. So this is a very strong and steep uptrend. So downtrend played out. We're back into trend range, but we exceeded the trend range so much, and this is exactly what we talked about. If you want to focus on this uptrend rather than the trend range, you want to see prices going far up away from the initial trend range. And this is such a clean and strong uptrend. You're so far from the key level. At this point, since this is such a steep uptrend, I'm adapting more to this uptrend rather than the trend range because it's simply too strong from the full breakout all the way here. I'm going to redraw the short and downtrend. Initially, you're expecting second entry long at the EMA because the uptrend needs new high. You have a second entry long here, but this is not a good setup because number one, it's an inside bar, and number two, it's below EMA. But okay, I still understand what's going to happen because you have a break in your extreme, 2 legs down, market moves in pairs of twos, and we're back above EMA. So this push above EMA is confirming to us that this uptrend needs to get new high. So high low confirmation setup would be good. You have a high low here. It's not the best one because it broke a little bit below, but you can consider this double bar entry now. Strong bullish bar closing above EMA. You can see 2-legged pullback, second entry long. There's this one little trigger for entry long. Massive push above EMA. EMA keeps holding, acting as a support. Market needs new high. So this is decent high probability setup. If you're going to use the secondary bar, you have to use the secondary bar. You cannot go long above the initial doji like this. Excuse me, not doji. The bearish bar. New high is tested, so I have to pause looking to go long. You have a second entry long, but we can't take it because we have to skip the first second entry long after breaking new high. Another mini second entry long, can't take it. Uptrend just played out. You have a downtrend working lower. This is pretty much waiting area. You know, this is technically double trap. Actually, it's not because the first entry long wasn't stopped, but you know, you just have a break in new high. This is a massive trend. This was almost 60 points. You can see this is where you made the new high. So you just have few more pushes higher. That can happen. Market keeps going higher. So once I can see structure price action, you have to ask yourself, does it look like the trend is over? Is the market reversing? Well, after breaking new high, there is no reversal attempt, no reversal attempt, and no reversal attempt. So it looks more like there is possibly a spike in a channel pattern, maybe something like this. But it is a secondary channel, and these secondary channels are always less reliable because we just had a break in new high, but it looks structured. You have consistencies of high highs and high lows. So it makes sense to focus on this channel. I have to withdraw the downtrend. You cannot take a second entry long so far from the EMA with the body. This is horrible. This is EMA tail trap. You can see massive gap between the body and the EMA. It also looks like a one leg down. Now you're below EMA, so I can't take it. Once I can see prices below EMA like this, and I'm thinking about secondary channel, high-low confirmation setup above EMA would actually be ideal. That would kind of clear things up that we need to get new high tested. No high-low so far. Now we're breaking higher, and now we have high-low confirmation setup. This is not the best high-low because it's not confirming a textbook high probability setup like we always take these. Like this one is confirming the second entry long because here you have first entry, second entry, third. This is the fourth entry, but you're confirming the fact that uptrend needs new high. Okay, uptrend needs new high. It looks bullish, spike up channel pattern. We're definitely not expecting prices to go back into trailing range because this was the attempt. That's the key level. We push higher. So the market is bullish. 2 legs down, visual one. I took this high low. It's not the best one. I want the market a little bit more aggressive because it's not confirming the best high probability setup. And it's a little bit too steep. There is no bullish bar pullback in between. Excuse me, no bearish bar pullback in between. So the high low is very hidden, the first entry short, so it may pull back stronger. I took it, trading is about taking a risk. It ended up failing on me just to see it go higher like this. That can happen, I think, because it was a little bit too steep for whatever reason. Doesn't really matter. You follow the rules, it either works or it won't. Breaking new high. You can't really take the mini second entry long, unfortunately, because it's below EMA. And this whole second entry short is also below EMA. EMA all these bars, too much congestion, so you can't really re-enter properly. Breaking new high, but market keeps going higher. And when I was watching this, actually, if I go on a 10,000 tick chart on a higher time frame, it looks like overall there is bigger pattern. What I like doing, I like focusing on this spike and a channel pattern because the higher time frame 10,000 tick chart presented this bigger pattern well, and you can see it also fits well. It makes sense. Big spike up, big secondary channel. I already have confirmations here. We have confirmations off of these highs. See what's going to happen. We're breaking below, so there's no setup. I'm going to redraw the downtrend a little bit longer. You always respect the correction, but you can already see how price action reacts. Okay, you have to train your mind to expect some certain behavior And it pretty much acts the same way every single time. It all comes down to mainly how well local the setup will form. You can see you have bullish pattern working higher. So you're looking for the key entry point. And once you have the key entry point, once you have the channel, most of the work is done, because now you understand where you can go long. And you can see there's always this correction phase, always a correction phase, either at the EMA or the trend line. And if you're at the EMA or the trend line, this is where all the magic happens, because it goes against common sense. You can see market going lower and everything in your body screams, hold on, we're selling off. I have to right now focus on selling, but you have to do the opposite. You have the key entry point and you understand that once the correction phase ends, there has to be a brand new push phase. That's how the price action works. And now we have bounce off the key entry point, quite a decent setup, break a new low, decent high probability setup. I took a risk here, market working higher. High or low below EMA, I can't take it, so I'm just waiting. Now we have another bounce here. It actually first triggered lower and then reversed up. So we didn't get stopped here, because I remember it perfectly. It first went lower and then reversed higher. So you place your order and it ended up working. I didn't take it because I was asking myself, why here the high low is below EMA and it failed. You're supposed to have some brand new push phase working higher, and instead you kind of rolled over down. But you know, it is off the key entry point. I can't really say it's against the rules, so more aggressive trader can consider, because you're buying at the bottom. Now because you're breaking above EMA, now I like thinking back about long opportunities. Horrible second entry long, and now we have double trap. Why is this double trap? Because there is something wrong with the second entry long. The second entry long triggered above inside bar bearish bar, so it's not good. So this is decent double trap. You can pretty much view it as a visual second entry long, because this is such a hidden entry. It's only bearish bar, kind of like a first leg, second leg. Either way how you view it, this is a great high probability setup. You can also view it as a mini fell breakout, 3 key entry points, small support, EMA and the trend line. This is a great high probability setup. I'm gonna mark it second entry long fell breakout. It's technically double trap, but because it's so hidden, doesn't really matter. Context is perfect. Quick, easy scalp. Market now reversed down, so I have to respect the correction, but I'm not giving up on my bullish bias. This spike in a channel pattern still needs to get new high tested following the rules. What I can do is, while we're getting a break, you have flat EMA and consistent pricings up and down. Compare this area to this entire structure. Every single time EMA keeps going up, and we have series of higher highs and higher lows. Here it's a little bit different. Here for the most part we're going sideways with flat EMA, so I can use a secondary pattern in price action to gain an edge over the market. I can combine the main bullish bias with the fact that the uptrend needs new high and the fact that we are in a trend range. So we have downtrend working lower. I can't take high low here, second entry long, because the downtrend can get new extreme. You're below EMA. I need something either above EMA, or preferably I want to see break a new low of the downtrend and then push above EMA. If I had a full second entry short here, honestly I would not like it above EMA, because this was such a strong push down. What if there's going to be the second leg down? But there was no setup anyway. And now we have fell breakout. And not only we have a fell breakout, one leg down, break, second leg down, perfect measured move. Market moves in pairs of twos. Okay, market moves in pairs of twos. So once you have this structure, you can combine expecting new high with the fell breakout. Remember, most breakouts out of trend ranges will fail, especially if you combine it with the bullish bias. So we have two legs down, breaking new low, great fell breakout, great high probability setup, great strong bullish signal bar. You're far from the EMA. EMA acts as a magnet. You're bound to pull closer to it. You have the uptrend on your side. You expect new high, great high probability setup. We're pushing higher, great confirmation of the bullish momentum. Nothing is changing. Downtrend played out. You're thinking about new high. So high low would be good, but higher low triggered above this bearish bar. This is a terrible signal bar. I cannot go long above this signal bar. So the next option remains a failed second entry short. And now we have it. New low, no break here, no break here. First attempt to sell because we broke below this bar. A little pullback higher, so after first entry short, there is a little pullback higher, the high low, and then you reverse down and you broke lower. So there's the second attempt to go short. First one was here, little pullback higher, second attempt now, it reversed, and once there is a break above this bar, after second entry short, it's gonna be a failed second entry short. And this is a great failed second entry short, and not only that, it's a second entry long, mini, new high, first entry long, second entry long. This is double high probability setup. You need to get new high. This is the best setup of the day. Textbook, it doesn't get any easier. And look at it go. You expect new high. This is a great setup. Two high probability setups in one at the EMA. Perfect price action. New high here, count reset, and uptrend played out. So because uptrend played out, now this means we have to pause looking to go short. Looking to go long. Downtrend working lower, so second entry short could be decent because it looks like we're reversing back into trend range, but we're back above EMA, and this was confusing. Now you have to remain patient. Remember, once market conditions align and the price action rules are met, you have to enter. Not taking a good setup is a trading error as well. This was the area, basically this entire uptrend. You have the key entry point, you expect a new high. This is the area where you have to keep taking those trades. But now it's unclear because you have a break in new high, so I cannot go long. But the EMA is not rejecting for me to expect new low. We're back above it. Why are we back above it? It's too bullish and I cannot go long after new high. So this is area of development and I need to be patient. This is where suddenly there is no bias and nothing is confirmed. So hopefully it makes sense. The whole time you're expecting new high. And because this downtrend now is back above EMA, it's telling you something is too bullish for me to sell, but I cannot go long because I will break a new high. So this is the exact area where you cannot take anything too sideways. So I'm not even thinking about setup. I'm just waiting for market to give me something better. Okay, something clear. Second entry short, but it formed already after you break a new low, so I can't take it. Downtrend played out. I'm going to expand the trend range a little bit because it looks like the highs are a little bit higher. Downtrend played out. So you can see trend range structure. We're at the bottom. So we're not thinking about selling. It's too sideways. So every single time it's too sideways, draw these key levels. Okay. And this is interesting. This is sort of like a multiple test because you have a downtrend, break, new low, push down, another push down. You can see how it is starting to go sideways. It's a bottoming pattern. This is a decent setup. You can view it as a kind of like a mini triple test. It's a long at the bottom of the key level after downtrend played out. Decent entry, smaller risk trading is about taking a chance. 3 points only. The bars are a little bit bigger today. It ended up a quick little scalp. It still survived even if you're going for more because the stop loss was never hit. I wouldn't go long here because now I'm wondering why we didn't push above EMA. You know, squeeze the high low. I was really expecting reverse here, but market reversed down. And this is another area just like we had here. Because now, since the support is holding and buyers are coming into the market, why the EMA is not holding? You're supposed to get some setup at the EMA, even first entry, and get new high. The fact that this uptrend doesn't have new high and you're back below the EMA is basically the same situation as was here. What is the bias? What is the structure? I don't really understand exactly now what the market is doing, so I have to remain patient. Breaking new low. Too much congestion. I'm just gonna be patient here. Just looks all over the place. The trend range is not really holding, but we're still going too sideways. Really avoid this area. This is important. This is where nothing aligns. It's too unclear. Every single time it is tempting to make a good case for buyers and sellers. You're probably going to get trapped. Okay, there's no case for the sellers here because downtrend played out and you're to support. So the case is only good for bulls. But now that you're hovering around the key level, you have flat EMA, there is no trend in either direction. Just a bunch of short-term spikes. So just be patient. This is terrible price action, but I can see, I'm going to make it once again a little bit bigger. I can see that the big range is still holding and you have series of high lows here. Okay, you have series of high lows, which is telling you, okay, the buyers are stepping into the market because the support is holding. Every single high is higher. This uptrend seems a bit too broad right now, but I can draw this one, let's say, like this. You know, you have a second entry long, which is tempting. New high, first entry long, second entry long. Problem is, it's still too part of this mess. You know, you can make a case for some resistance. I don't like it. It's a decent setup, but you're proud of this messy structure. Let's be patient. Market keeps working higher. You have a second entry long below EMA. I was playing now this channel. Market keeps going higher, but because it's so steep, I adapted to this channel right here. Spike is working higher. We have small overshoot, and I'm also cutting the corner. If I draw a little bit like this, the overshoot is more visible. This was unclear because I really like using this swing. We have clear overshoot because you have the massive bar at the top. If you draw it like this, there is no overshoot, but also you don't have no confirmations, and this swing is kind of part of the consolidation. So it's better to treat this as overshoot. If you're not sure, that means the setup and the structure is more aggressive. You have a second entry long here, which is decent, but we skip the first second entry long after overshoot. If you're not sure if it's overshoot or not 100%, you cannot take it because you're taking a risk. If you want to take aggressive setup, you can consider, but we skip the very first second entry after overshoot. Now you have a high-low confirmation setup of the structure that, okay, this is probably not overshoot. Notice how big the bar is closing. The higher it is closing, the more it's negating the bearish pressure and more it is in favor of the bulls. And this is a great hyperbolic setup, high-low confirmation setup. This is what clears things up. High-low is always a confirmation setup that clears things up. Quick little scalp. Market is correcting. We're reversing too much down like this. So since we are not pushing above EMA, I have to expand the downtrend because we're going back into trend range. There's not going to be new high. The retracement is too deep. There are too many low highs and low lows. You know, we have a second entry short here, but we have inside bar, and problem is it looks like overshoot. This was structured downtrend, and now you have overshoot. It worked, but you need lower high just like here, so I can't take it. You need lower high. Downtrend is in play. Good. We're correcting, and we have a second entry short. Okay. Clear confirmed downtrend, new low, first entry short, pullback, second entry short, great signal bar, great hyperbolic setup. This is much better, more confirmed, great hyperbolic setup, second entry short to test the new low of the downtrend. Downtrend is to get new extreme, and now the market is basically about to close. So this is the overall structure for today. It's quite a long video, and I thought I was talking too fast. There's so much price action, a lot of decent setups, a few tricky ones, but for the most part, a lot of good trading opportunities. So I'm gonna wrap it up. I hope you had a good trading day. I'm gonna talk to you next time. Good luck in your trading.